Welcome to this video, and in this video we will talk about what value investing is. Value investing is an investing strategy that has turned out to be one of the most profitable strategies that ever existed. The basic idea behind value investing is investing in a stock that is actually worth more compared to the price it currently trades for. For example, if you invest in a company that trades for $70 while it is actually worth $100. Now, what the stock of a company is truly worth is what they call intrinsic value. So in other words, value investors try to invest in companies that trade at a price below their intrinsic value. When a stock is priced below its intrinsic value, we say that the stock is undervalued. And value investors are always on the hunt for those undervalued companies. Value investors believe that these mismatches in price and intrinsic value are caused by temporary factors, such as the misinterpretation or overweighting of bad news about a company or the sector it operates in, or simply by a temporary emotional overreaction in the financial markets in general. Now, value investing has proven its success over time, since many of the most successful investors ever use the value investing approach. Think of investors like Warren Buffett, who is one of the richest persons on earth. Other famous value investors are Benjamin Graham, Sir John Templeton, and Joel Greenblatt. Now, despite these successes, value investing isn't as easy as it sounds. The hardest thing about value investing is determining the intrinsic value. And this is because intrinsic value is something subjective. In other words, you might assess the intrinsic value of a company differently than your neighbor. And this can depend on many factors, such as one investor simply being more skilled than the other, or having access to better sources of information. Other factors could be understanding the information correctly, or being better capable to analyze the financial statements of a company than the other investor. Now, value investors try to determine the intrinsic value by making use of fundamental analysis of a company. This means they look at the fundamental factors that determine the success of a company, such as the business model, its management, competitive advantages, but they also take a look at financial statements and financial ratios to determine the profitability and financial strength of the company. Now, every investor can come up with a different conclusion by looking at the same facts, and therefore end up with a different intrinsic value for a stock. So all in all, value investing is the strategy of investing in a stock that is worth more than the price it currently is selling for. And determining the true worth of a company is what we call determining the intrinsic value. Now, the ability to which degree you can come up with a precise enough estimation of this intrinsic value will determine your investment success for the largest part. So that's it for this video. And we hope you enjoyed it and learned a lot. Now, if you want to learn more about the value investing approach, you can click on the link in the description, which is a very good place to start. Now, if you have any questions or comments, please let us know.